What's up, traders and friends? Friday. It's Friday again. Happy Friday to you all. Hope you had a good week. Apparently, JPow came in and gave everybody what they wanted, which is rumors of a rate cut. Now, of course, like a good Fed president, Fed presidents can't come out and just say, "Hey, we're going to cut rates." They can't say that at all. Instead, he said that the current conditions may warrant interest rate cuts, but the market, all risk assets, took that as a sign that we're going to go moon. But are we really mooning, or are we just kind of recapturing the highs like in the market here? This SP 500 index futures haven't quite made a new high yet, but I want to talk about what this means to me and what I'll be looking for here because I'm still looking for a better opportunity to buy risk gas than we got in this past week. But yeah, let's let people come in. We're going to talk about it. Going to do a catch up on my positions because pretty much all the things are up, and I want to see if all my theses are playing out. We'll follow up on Monero as well. So just hang out. I'll be right back. All right. Well, well. All right. So what happened? What gave us a big old yeet, big old green candle today? Well, Jerome Powell was talking and he suggested, by the way, one of the key qualifiers for being a Fed president is to speak without making or speak in a non-committed way. In other words, don't ever commit to anything and be able to talk for an hour or two without saying anything definitive enough to move the market, because every single word and phrase that you use as a Fed president is going to have trillion-dollar effects on the world. But yeah, suggesting that the market may be supportive of a rate cut, that is something that will definitely move the market. Why is this? Why is this? Why is this? Well, that's because when money is cheap, well, when interest rates are low and people can borrow, that's seen as bullish for the economy. In other words, people can take out loans, they can expand their businesses, they can borrow money to buy assets. And, we all kind of remember how fun that was. Remember how fun 2020 and 2021 were as far as, everything risk assets, whether it was stocks or crypto. Speaking of which, I've been talking about this for quite some time. The two things I mainly talk about here is stocks and crypto. Those are the two things that I've been doing for well over a decade, for both of them, actually. And by the way, if you have symbols to look at in any of these markets, make sure you post them in the chat, because I like to use this live stream for you guys to generate opportunities. If I like something, I'll make a note of it, and I might even take it. A lot of things that I've gotten this year have come from this live stream. Me just taking a look at it, evaluating based on what I like and what I don't. I mean, one of the key things, another thing today, I'm going to go through positions, see what was affected, what wasn't affected. Am I getting what I'm looking for as far as pullbacks on some of these instruments that I've been looking at? But yeah, one thing that kind of sticks out in mind is Whirlpool. Now, this is one that was, let me clean this up. I like clean charts. I like clean charts. So this was one that was brought up to me in a live stream almost 2 years ago. Almost 2 years ago, because what it did was it came back to a volume profile level. The things that I talk about here, the things I like to use are volume profile, 50% retracements, Ichimoku, and I'm starting to kind of integrate moving averages. I can't deny that they are useful. The reason I don't particularly like them is because they're a little arbitrary. That's why I've always liked 50% retracements or volume profile levels like this one. But yeah, it was very, very clear that the volume profile level in Whirlpool, Murlocs, was 75.53, and that's the level it hit early this year during the whole tariff debacle. Of course, if you would have thrown a dart and bought anything back in April, you probably would have done well. But this is a good, nice long-term play. I also came up to the volume profile level of the move going down. But yeah, up 6% today. Great. It's within this range. Notice how it had this massive sell-off down to this point. This is also the other things that I've picked up this year off of key volume profile levels was Dollar General. Again, massive sell-off down there. Mondelez, it's a candy company, by the way. Hershey's, another candy company, picked it up. And what is it with all these dead companies that I like to buy? Well, I mean, I like to go on Twitter, X, whatever, and kind of read the room, see what the memes are. And one of the things that kind of permeates when you look at the more viral posts that people like and stuff like that is they talk about, have you heard the phrase on Twitter, God candle loading? I can't think of a single time in my history of trading and watching markets, from all the things, from the pot stocks to the crypto cycles. There have been many I've watched. At no point when somebody says God candle loading, does a God candle ever actually load. That's like when people think that things are going to die, when people think that things are going to go to zero, like Humana, for instance. Humana was one that I've been talking about since it dropped back in May of this year. And I initially picked it up at 322, didn't hold it, had to cut that position to manage the risk. And then it came and did what I talked about last week, I called a low sweep. That's where, most people, they'll put their stop right below a major low, like a wick like that. And very often, price will come down, take out people's stops and go. Now, at some point in that dip right there, some point, maybe that smaller green bar right there. That's where actually, I would say Warren Buffett bought it, but it's Berkshire Hathaway, his company. Warren Buffett has kind of semi-retired now. He says, I mean, he's in his 90s. I guess I don't blame him. I mean, how can he's 90? That's pretty impressive to be going so long. But yeah, I mean, and when price is down like so much, that's actual opportunity. But you don't see people going on Twitter talking about how UNH God candle loading. But I mean, arguably that candle right there, that weekly candle, once it came out that he was in it, a 19% candle on a multi-billion-dollar blue chip company, that's a God candle. Just like these are, I guess, devil candles, I guess. But everybody's talking about the God candles that are coming with crypto. God candles was primarily a crypto term. Let's face it, or tech term. But when people are looking at that, when people are already plotting their retirement, guys, that is not opportunity. That's the opposite of opportunity. I was walking with a good friend of mine this week, and he said, "Hey, man, if you got any like tips, hot tips or something like that that you're buying, I won't hold it against you. Just give them to me." I was like, "Ah, God, I don't work that way. Like it's when I bought this down at 245, which again was, the volume profile going back to, 2018. Let's draw it up again right here. When I bought it here, price was going below this low right here. I mean, at that point, inevitably you're going to start thinking, oh man, this thing could go to 100. This thing could go below 100. You don't know. At no point, how can I put this? Not at no point, but in every single great trade, great investment I've made, I've always felt a level of discomfort putting it on. I would like to say that after years and years of doing this, it gets easier, but it really doesn't, because actually the longer you do this, the more losses you take, the more you end up with some losers and winners, of course. I'm still here, but the more you appreciate risk. And so you begin to become you kind of embrace that discomfort, okay? And because you can't really tell somebody, hey, this thing's going lower, you need to pick up United Healthcare. I mean, it doesn't work that way for people. Or, in the case of Dollar General this year, where this thing had come down from its high almost 75%. How about something a little more fun? What about Nvidia? So Nvidia's, of course, been going on a tear, but people have forgotten that just a few years ago, back in 2021, it had a minus 68% pullback. I mean, were people talking about God candles loading when they're 68% off the high? No, 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 they're not. And so you got to stay away from things when everyone is super excited about them, because what you see on a price chart is a reflection of the market's emotion, what they have valued it as. And if they value it as shit, it's going to be low. If they value it as the next thing, next best thing, since slice bread, whatever expression you want to use, that's what's going to be reflected in the price. And it's going to be super high. And that's the opposite of opportunity. So you can stay away from those kind of memes and getting caught into this. I got a text message, a random spam text message today saying, "Hey, we got a stock." I think, what was it? What did it say? Uh, Our team is focused on a potential stock, expecting returns of up to 60% next week. If you want details, reply yes. I mean, to get free trade advice. Does this actually work on people? Does it actually work to say somebody like, I can give you 60% returns next week? I guess it does. Kind of like Indian scammers. They wouldn't keep calling old people, telling them that the IRS was going to, take their retirements if it didn't work on some of them. But it's ultimately playing into people's greed, fear and greed, fear and greed, fear and greed. So, well, as that guy said about, you guys seen that clip of the guru talk about, democracy is a system of the people, by the people, for the people, but the people are retarded. I don't want to say that people are retarded. It's fun to say that, but I think it's more like we want what we want. We want to make a lot of money fast, and opportunity is not obvious. That's what I'd say about that. But anytime where opportunity seems obvious, it's not. And that's just the way I roll. I don't know any other way. People, I had a friend of mine tell me, I should leverage into, a bunch of crypto a couple weeks ago. He said, "Hey man, you got a lot of money. You could probably make a lot of money right now." I was like, I physically, my hand won't work. It won't work. If I go to press the key to buy something when it's going up, like say Ethereum for that example, I just can't do it. So, all right. Um, let's talk about the thing for today and the rate cut. What I think, or no, it doesn't matter what I think. What I'm looking at basically, and in the recent year after the election, poly market has become a very interesting indicator for assessing what's going to happen the future because it predicted the election. Because there's something about when people put their money where their mouth is, they I don't know what the exact phenomenon is, but when people put their money where their mouth is, they tend to be a little more right than if you're just throwing out, bullshit opinions with no skin in the game. But as you can see, going up into the last couple of days, weeks, about 2 weeks into August here, essentially they were betting on about an 80% chance of a rate cut. This was by August 14th, so it was about a week and a half ago, basically. And then slowly, 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 for whatever reason, people started thinking like, I don't know. We had a big a little pump in inflation data. I think of the PPI number last week, which gave us a nice little market tank. That brought down the rate cut odds. And so, by the way, this is Polymarket Fed decision probabilities. Is what people are betting on. People can bet money what the rate cut's going to be. Now there are official markets for this. Like this is totally the retail have fun betting degen market, but there are actual rate betting markets, but that's above my pay grade. Those are what bond traders use to hedge their risk. So you could do it in that kind of market, but I'm not an expert at that. This is a lot more fun to talk about. It's a lot more straightforward too. So what the market is pricing in is a 77% chance of a Wednesday, September the 17th rate cut. And actually, there's 3% of people that want to bet on a 50 basis point rate cut. By the way, basis points always kind of confuse me too. That's basically like 0.25%. I don't know why they don't just say that, but like a 100 basis points is 1%. Okay, so basically what the Fed rate is right now. Hold on, what is the Fed rate right now? Just so I don't misspeak. What is the Fed rate right now? 4.25 to 4.5%. And what this is, kind of do a little teaching here. That's what I like to do, by the way, teach. If you like what I'm doing, make sure that you do the like and subscribe. And by the way, also make sure, as you guys know, put in your symbols. We'll look at them in the latter half. We'll go through them all and see if we see any opportunities there. It's going to be hard to find opportunities now the market's pumped, but let me keep talking. I'll tell you what I'm looking for here. So what basically the Fed rate is the overnight rate. It's what banks lend to each other overnight. And from there, everybody likes to play a little bit of arbitrage. They like to tack on a little bit extra. And so that's why when the rates go up, the Fed rate goes up, your mortgage rate goes up, is because the banks are lending between each other. Then they set up a loan that they're going to use in their portfolio of mortgages. And then those mortgages are going to get passed to the consumer. I don't know even why banks have to charge so much more for an interest rate of 6.57%, whatever it is right now, because all federal loans, as far as I know, are backstopped by the federal government. There's no risk to banks. But anyway, I'm not going to get into that discussion. Some people think that we're going to get a 0.5%, small amounts, but then also there's still a chance that we don't get no change. And I guess technically we got a little under a month, but a little bit of time for this to kind of level out. But it does seem to me that the market is pricing in a rate cut. And then what does that do to October? Well, now it becomes sort of like a 50-50 proposition that they will or won't. I would bet once that if they do in September, they won't in October. And so that's a little bit more time into that. So we'll see what happens there. But, like anything, you got to understand this is going to be a news event. Okay. And we need to understand the rules of trading news. I don't trade news events, but what you need to understand is there's a concept in trading and investing, marketing, whatever. Buy the rumor, sell the news. Right now, it's a rumor that there's going to be a rate cut. And so as there is a rumor, you see this straight up buy the rumor. If you were just a trader and you did something like this, as soon as you heard that there's a rumor, you buy it. But then also there's the second half of that equation, which is sell the news. And so essentially what's going to happen is if there's a rate cut, what you can expect is a day of some volatility, but the market's already priced it in. In other words, it's not going to go up much more than the rate cut. Now, from now until September 17th, because the rumor is still out there, I would expect the rumor to get bought. And then on September 17th, if the rate cut happens, then basically you're going to see a lot of chop, really quick volatility, and then that's going to be it. Because what is the next thing to move the market? We'll have to wait and see. If they don't raise rates, that would be a very big sell-off because the market was pricing it in. So next Fed meeting is going to be pretty interesting to watch. But at this point, what you have to assume is that we're going to be and continue to be bullish going up into that because that's what rumor has taken over the markets. And then there's going to be a lot of let's see. Let me bring up my calendar here. So there's going to probably be a bunch of inflation type news that'll come out between now and then. So let's do this filter. USD apply filter. So GDP numbers coming out next Thursday. That's going to be a big day for the market to move because that's going to determine if they if they lower rates in September for sure. PCE price index, that's going to be another. So Thursday and Friday next week are going to be very interesting days. I will definitely be sitting there looking at futures, see if there's any opportunities to trade them. And then the week before is going to be the Thursday, September 4th, is going to be the unemployment numbers. That's going to be another thing. And so those two announcements are really going to dominate what's going to happen with these rate cuts and everything. Now, why do we need rate cuts? A friend of mine told me today that rate cuts are all political. They're just doing it now because Trump is like pushing them to do the rate cuts. No matter who comes to me and talks to me about politics and investing, I tell them, stop. Don't let your politics come into it. Now, I have to nuance that because when someone like the president, whether it's Trump or Obama, because Obama did this as well, whenever they say, now is a good time to buy, you better buy because they actually do have their finger on the button of making things happen. So there's that kind of cutout caveat to it. But as my friend said, he's like, well, they cut rates in September before the election. Yeah, but you know what? They cut rates in December after the election. So let's remove the politics from it. And let's just presume that the Fed is doing what their mandate is, which is looking at the economic data, which I know a lot of people say, oh, it's all fake. It's all made up. Well, you know what? Maybe they do fudge it a little bit. But you know what? There's a bunch of people that are working hard, crunching data to release these numbers so that businesses across the country can make decisions going forward with their businesses. It is a public service to release these numbers. I'm kind of shadow boxing the conspiracy theorists a little bit because I just don't find that kind of talk to be particularly useful when it comes to things. I mean, just unless you see something that is absolutely contradicts the narrative, just take it at face value. And just let's just be traders. Let's be objective. I really don't like narratives. I tell you right now, do not like narratives. That's why I focus on charting and technical analysis because it removes narratives from it. Narratives have gotten me into trouble. Narratives, like honestly, let's start going through the charts right here. Ethereum, which has been the huge winner, I've been very, very wrong about Ethereum. I was consuming lots and lots of data a couple of months ago, back in May, when it hit this 27 level right here, and I had it short. Had a nice little time right here when it came down, but I was shooting for a lot more because I read about how there's fewer users, there's less staking fees. I mean, and I saw that, other smart contract chains like Solana were starting to eat their lunch. And I was like, well, Ethereum must be dead now. Didn't matter. The narrative didn't matter. No, I don't think anyone that sat around in Ethereum, bullish of Ethereum, could explain to me why it would go up or why it is going up, except for because Moon. There's no reason. There's no reason to it. Don't even waste your time trying to find it. Just focus on if the charts. In this case right here, when this thing went bullish back in May, right there, Ichimoku breakout, momentum, positive, never actually went bearish on that dip back in June. Never actually went bearish, never got on this side of the cloud. Bullish trend. So I don't like narratives. I don't like, you know what? If I ever start talking about a narrative that's like specific to an instrument, call me out, please. Call me out, please. I just want to look at charts. Speaking of that, though, I mean, very clearly what it's doing right now, you have the past major high, which was back in December. It was also the high back in March of last year. It was very, very interesting that this thing came down and held that there at 40.70. It missed the psychological level. It respected the 50% and the past high. Now what it's fighting is coming up here to test the all-time high. Now this is going to be big because, as you know, Bitcoin did the same thing last weekly close. It failed its all-time high breakout. We'll look at it in just a second. But that kind of a pullback and hold with a nice launch like you have, especially since it's right there, watch this weekend or going into next week, either one, for it to break that all-time high. Now, does that mean we buy it? Hell no. We need to see follow through. We need to see it actually make a close. We need to have a big green dildo filled bar that actually matters. Okay, so we need to have a bar that looks like something like this. Needs to come up and needs to do that. Needs to punch it, and it needs to close solidly above that all-time high so that you know that people are buying it past it, and it's not just a false breakout. False breakout is going to be the worst thing because that's one of the most consistent bearish signals you got. Speaking of that, you have, of course, Bitcoin, which last week, clean this up. That's exactly what it did on Sunday. Well, Sunday's when the bars close on crypto, by the way. And that right there, I don't know the future. I just want to look at charts, but that is a very bearish thing. That is a bearish signal. It was a bearish signal back in January of this year. It was a bearish signal back in March of last year. And it was a bearish signal, most importantly, in November of 2021. You want to see, when you break an all-time high, something like this. Okay, so this was an all-time high here, right? That was an all-time high that back in March, right? And then you have that big green dildo bar to punch it up into the next level. That's what you want to see, a big green weekly bar. If you don't see that, you're going to get a pullback. You almost guaranteed. There's nothing 100% in trading, but that you can bet on. So right now, Bitcoin is settling into that phenomenon itself. And it's very, very interesting how it's starting to set up. You're going to have a little test probably this weekend. Over the weekend, when volume dries up from, the equity markets, the U.S. trading hours being closed, you're going to find that you've got a 50% level and a volume profile, the whole range level sitting at 117,974 here on Bitcoin. That is going to be a big level, just at the same time that Ethereum is going to be pushing up at its all-time high, seeing if it can break it. And so, yeah, this weekend, watch these levels. Watch this 50% level on Bitcoin over the weekend. That's going to be your resistance. Look where the bar closes. Look for the daily and the weekly bar closes at that level, and then watch to see if Ethereum makes a run for it too. So these are going to be really, really, really interesting weekends. Maybe. I think so. I think that in this lower volume, they're going to pump it up a little bit, because yeah, but they're all being moved by the rate cuts. They're all being moved by the risk on mood, and as I've kind of said, to maybe poke the bear and troll the crypto, not really crypto maxis, but the Bitcoin maxis a little bit. I do not see a fundamental difference. Well, I see a fundamental difference. I do not see a price difference in crypto and equities anymore. They are both risk assets. If I blurred out, I can't blur this. Hold on. So if I blurred this out, if I blurred these out right here, and you couldn't see the titles of them, could you tell which one was which? Could you tell which instruments these were? This is a 1-minute chart of S&P futures and Bitcoin. They move the same. They move the same. A lot of Bitcoin maxis don't want to hear that because they want to believe that their Bitcoin is somehow special. It is somehow different, but the market is basically treating it the same. And the correlation between the two are extremely, extremely close, especially during U.S. trading hours. And they're going to be moved by fundamentally the same things. The risk cuts. Really nothing else. Really nothing else. So yeah, let me catch up a chat here. I've been rambling for a second. What's up? Personally, people feel they want to be really smart and won't get the help they actually need. Want the fast path. Yeah, like I was talking to a friend of mine today who he was saying, hey, a friend of his is thinking about getting one of these automated trading bots. And I said, you know what? I cannot express enough my confidence in my knowledge that such a thing is bullshit. Now, if somebody sits down and codes a trading bot for themselves, and then they update it and keep up with it and have it change with the market. In other words, traders, investors, use their brains to adapt to the market. That's fine. But out of the box, buy a solution. Absolute scam. Absolute scam. There is not a question in my mind. I've already given you the nuance. Let's see. What are you saying about North? Are you saying narratives? What is narratives? No, it's narratives. Yeah. Got it. Okay. All right. Let's catch up here. We'll look at Tom just a second, and we'll look at hymns. You got shaken out on what floor? I'll test the all-time high again and break out nicely. Give it. BTC belongs to Wall Street now. Hey, you and I, we have the same opinion that Bitcoin belongs to Wall Street. It does. It makes me sad. It makes me sad that the revolution, as it were. I don't think I was really wanting the revolution a decade ago. I just like the idea of having sovereign money that was yours and it couldn't be confiscated, and that you could trade the idea of value with people across the internet without censorship. And it was just a great idea. But now it's just not. It's not that anymore. And that's why I've gravitated to, as you guys know, if you watched a lot of my live streams, every week I talk a little bit about Monero. Monero is, of course, privacy by default. It's had a big old nice FUD, fear, uncertainty, and doubt, as this other chain, Cubic, was trying to market their coin. What they did was they tried to convince people that they were able to achieve 51% of the hash rate. In other words, they were able to take over the network, but that wasn't true. In fact, it's been interesting to, I've been gathering, bookmarks And yeah, so I'm going to be doing a presentation come next Wednesday. I'm going to be doing a little talk. I'll video it actually. I think I'll publish it to my channel as well. But they've actually been community noted when they've been trying to claim. They even had Cointelegraph jump on this bandwagon saying they achieved a 51% hash rate. But no, they haven't. And overall, what it's been is a marketing gimmick to try to pump their own coin. Now, there's validity to all this. There is validity to the fact that uh, proof of stake, excuse me, proof of work is vulnerable to people with lots and lots of computer power. And what people speculate they're doing is renting out the computing power, like from cloud services and things like that, to try to achieve these high hash rates momentarily. But that costs a lot of money, actually. And ostensibly, they're doing it to try to pump their coin, which is Cubic. And it's been resulting from, you've been having a good bit of pump from that. Not going to knock it. It has. Good luck finding a place to trade it. They're just trying to bring themselves to the forefront, make a bunch of money, that kind of thing. But what I'm really optimistic is going to come out of this situation from Monero is a more robust security when it comes to mining. I really wish that part of that was going to be making mining more profitable. But it's just really hard to profitably mine. It's just, in fact, number has to go up. But you have to remember that the purpose of Monero is not for, YOLO sick gains. It's to have a sovereign private money, privacy by default. You send money to somebody else. Nobody can see it. Nobody knows how much was sent. Nobody knows who it was sent to. We need something like that. And unfortunately, that's been getting censored by, lots and lots of governments. Europe has completely taken, as products of regulation, Monero forced them off exchanges. And starting September 2nd, Canada has actually made the last holdout, Kraken, take Monero off of their exchange. Why? Why would you want your people not to have a private money? Yeah, because terrorism, of course. No, because you don't want people having too much privacy. You don't want people having too much freedom. We really take for granted here in the United States that um, we have freedom of speech, and we also have a little bit more liberty. Fortunately, I think it all kind of like freedom of speech doesn't necessarily translate into freedom of cryptocurrency, but we do seem to be a little more resilient to um, these kind of things, at least in the current political zeitgeist, which should last for another 2 or 3 years. So we'll see. We'll see. But one of the big selling points for Bitcoin and Wall Street taking over is the fact that it isn't private. That this will, because the government can see every transaction, that they will be more friendly when it comes to regulation and allow it to continue letting number go up and everyone get rich. That wasn't really the point for me. So MicroStrategy. Interestingly enough, MicroStrategy uh, hit the EMA down here. I watched that, and actually, when it came down to this point, I actually sold some puts against my bought puts. That's the way I've been managing this position. By the way, in case you don't know, my long-term thesis is MicroStrategy to zero, and how I've been doing that is I've taken out long-term puts out to 2027. Do we have 2028 yet? I'll have to look. But in order to offset that theta, what I do is I kind of manage that position, keeping a certain amount of short delta while keeping a positive theta if I can, or a neutral theta. And so this was a good opportunity for me to sell some October puts against it to offset that theta. And so that's how I managed the position when it came down to hit the EMA this week. I still think, and again, I don't know if people noticed it or not, but 2 weeks ago, after their earnings call, they announced that they're not going to be diluting their shares anymore to buy Bitcoin. Now, why would they stop doing the infinite money printer? Well, as Twitter loves to brag about, BlackRock now owns whatever percent of MicroStrategy, as well as lots of different other things. And Turns out they have an opinion about diluting their investments, and they were like, stop that. No, you have enough. You have enough. You keep on memeing on Twitter to get people to buy your digital collectible, but no more diluting your shares. What happened is that was one of the main buyers of Bitcoin. Oops. We'll see how that plays out. If Monero is used on the dark web, I'm bullish for it. Well, Monero's been used exclusively on some websites as of the last year or two. And, when it comes to gift cards, when it comes to, any kind of use for private transactions or, actual, real world applications. Like they had a libertarian conference. I can't remember the name of it a couple weeks ago, but they released a report. I've talked about it in a past live stream. Of who used like what currencies they used to buy stuff at their shops and stuff. And aside from cash, like US dollars, like dollar bills, Monero was the top cryptocurrency, followed by, Bitcoin and of course Lightning Network they couldn't get running. LOL. But yeah, that was Monero has overtaken Bitcoin for the use case of online money. It has. It's been that way for some time right now. But besides, who would want to spend money that you think is going to be worth more later? That defeats the whole purpose. That's the enigma of the whole prospect that they haven't really been able to square. So, well, I think that MicroStrategy is going to try to buy Bitcoin with their bonds and their whatever. They've got their preferred series. Oh, wow. Okay, so for those that don't know, they have this preferred stock option, which has this structure where you give them money now, and they will pay you 8% interest on it. And how are they going to generate that 8% interest? By selling shares of their stock, which is kind of interesting. Well, it already kind of started dropping to this point right here, but the par value of this is 100, by the way. Which means that it functions kind of like a bond, that if you buy it at $100, that you're getting an 8% yearly return on it. And so right now you're getting a slightly better because the price has come down. But this is an interesting try. I haven't looked at this in a while because I'd be interested to see what happens. There's STRK and then there's strategy, 10%. So the preferred stock, that's transferable into actual stock, but it's like at a 1 to 10 conversion rate, which means that if you buy a $97 worth of it, you're only entitled to a tenth of a share. And so what you're actually buying at $97 is you're buying $1,000 MicroStrategy shares. So you're overpaying by 900%. At the promise that it will go up to that price at some point. At least that's what people thought. And then on the 10%, you're getting paid 10% for your money, but you're not getting those shares. You know what? It's there are people that are really bullish on Bitcoin and MicroStrategy. In fact, when they talk about having a diversified investment portfolio, they really just debate how much MicroStrategy do you have, how much Bitcoin do you have, and they can talk you for hours about how these products work. But ultimately, they're just Ponzi's. Give us money now. We promise that we'll make Bitcoin go up and make you rich. Give us money now. We'll pay you a little bit of interest for it, and we're going to buy Bitcoin and make you very, very wealthy. That is the promise of these products that MicroStrategy. That is what a strategy does. They lose money on their software. That's all they do. Financial engineering. I wonder if they have a history of financial engineering. I wonder how that history, that MicroStrategy, because you can go back and you can look. I wonder what they were doing 20 years ago with their stock. I wonder if history repeats itself or rhymes. We'll see. All right. Let's look at some symbols, by the way. Put the symbols in the chat. I'm going to go through a little lightning round of the positions. Palantir did a big hit I was actually looking to see if I could trade the gap break. And pretty much anytime you see a gap, like it happened on Tuesday of this week, it's going to come down and fill that gap. I don't actually know if I want to be in Palantir anymore. I don't like them because of their surveillance stuff. But again, what I tell you guys about narratives, I can have like I can have an opinion, I can have a political opinion about it, and I can say I don't want any Palantir, and I can stop making gains. Kroger, it's kind of fighting up there, but I think this is a good stock to hold. I mean, what are you gonna? I don't think it's gonna moon very much. Dollar General doing pretty well. Mondelez, Hershey's doing pretty well, caught in here. Whirlpool doing a little recovery. We'll see if it can break past 50%. Tesla, of course. Now, by the way, one of the things I hate is diagonal lines. I drew this about a week or two ago because what Tesla was doing was it was doing one of these classic wedges. And if you go on, look on social media, you'll see people love to draw these wedges. But there's always the question of, well, how do you draw the wedge? Where do you draw the diagonal here? Oh, well, if you drew it here, then you could say, oh, well, see, it bounced off that level. That's a bullish sign. But wait a minute, bro. That wasn't the high up here, and in this case, didn't it come up and do a false breakout for you? Or, were you supposed to do it here and then you had, that low? See, I don't like arbitrary stuff. I want things to be fixed so that if I come back and look at it, I know what I'm doing from one day to the next. But TLDR, Tesla is just kind of sitting there doing nothing relative to Tesla doing nothing in a nice little range. SRPT, I'm still in this thing. I am. I don't like it. But it's a pharmaceutical company that took a big old hit a volume profile level at 1485. We're going to see what happens. I sized it pretty small. Intel, are they going to finally break out? I don't know. I'd be interested to see if this 20 was the last time it's going to hit that, but we'll see. Agilent, this is a 30-minute a 30-minute spike trade from July that hit a major 50% level there at 111, came back to retest it again. We're good. I'm sitting pretty in it. Copart is a pick from somebody on my Discord who follows the methods. Let's do a quick recap of this. This is why I do this live stream, by the way. And make sure that you join the Discord, talk to me a little bit in there. If you post an idea, I will definitely dig into it, look at it. But Copart, it's either a live stream or it's a Discord one, where someone came in and they said very simply, hey, look, Copart is pulling back to a weekly 50% level, 50% of the low starting back in September of 2022 up to the high in December 2024. Nice deep pullback. These are the kind of things I buy. I can't buy something going straight up. I buy pullbacks. And there were actually 3 potential levels that it could have hit. It could have hit 45.25. It could have hit the EMA there about 44.94. And then there was, of course, this volume profile level here at 44.53. And the first one, this is kind of like the trade-off of when you're trying to take a position. Like, do you want to take the first level? I want to see confluence. I want to see the levels match up. And they sort of matched up there. So I took a small position at 45.26, expecting that I would probably get a little bit better of a position, a little bit deeper into that pullback. Didn't trigger. So I'm in a small position off of that because, as I said, look, I wish I could YOLO things. I'm just too old I'm just too old. I've been in this too long to just throw care to the wind and go full portfolio into anything. And so I tend to take a sizable position. I say, okay, if it comes down to 42.28 and I lose this much, what is that a position of my portfolio I'll cut? It's usually going to be under 1%. And so I say that because you always wish that you were bigger in your winners, but that's just always, but you're glad you're small in your losers. So it's better to be small. I know it. Every single trading advice will do that. But anyway, this is from a viewer. Actually, Copart coming down to that level. And this is kind of what you want to see. I don't really know how to quantify it, but whenever you come down to a major level or up to a level, you want to see a reaction. And so for it to just run away from that level, that's good stuff. That's good stuff. Good stuff on Copart. I think they do something with cars. I don't know. I don't care. I don't like narratives. I like lines. I draw lines in a chart and manage risk. That's what I do. All right. So Humana. Humana is I think I missed it kind of thing. Not really, it didn't really have a very good level to pick it up back in July, but it needs to come and conquer this 300. So we may get a chance. Humana. If you didn't watch my last week's live stream, healthcare. Real quick synopsis on the on healthcare thesis. Boomers. There's a lot of them. They have a lot of money. They want to stay alive. They're going to spend all that money staying alive. Healthcare. It's that simple. That's what I want for the next decade is healthcare stocks, healthcare companies. Companies that are going to make money selling life to boomers because it doesn't matter what inflation is. It doesn't matter what it costs. Who's going to put a price on their health? It seems very simple and obvious to me, but ironically, or not, if you're a big conspiracy person that thinks Wall Street tanks things to buy it back up, healthcare has been the worst, or at least it was, the worst performing stock of 2025, or excuse me, worst performing sector. Eli Lilly, which has consistently printed me money for decades. I know I talked about it last week, posted in the Discord, 640. I kind of thought maybe we would, again, get a pullback down to another level of confluence there, but we didn't get it. Market bullish. You know, that's actually kind of a takeaway that you can have when price is respecting the first possible support. Very, very bullish. But Eli Lilly definitely wanted to pick up some more of that. And I did. I wish it would have come a little deeper. But 640 seems to have been that level. And this thing has just been, oh, I've loved this for, I probably started buying this back in 2011, 2013, even before I really started getting into trading itself. It's one of my longest and biggest holdings, actually. And so a chance to pick up a little more of it. Yeah, let's do it. United Healthcare, of course, 245. It's been a great buy. I want to see it reconquer that 50%, but we're good. Intuit, I'm not in Intuit because I was watching to see what happened at this. This was another one that came up in by a viewer. I watched it. I did not take this because what happened was you have the past all-time high here, all-time high. That's where that blue line is right there. And so again, I'll sit here when price gets to that level. I'll set an alert and I'll see what happens. As you can see, price came to it and closed on a daily bar below it. Not good. Now, that doesn't necessarily mean it's going to be bad because Eli Lilly did the same thing. It closed below it. But then on this bar right here, where Eli Lilly started getting above it, opened back above it, it's like, okay, now we got a response. I actually, this is about as, I bought it on Wednesday of last week. Was it Wednesday last week? No, it was Wednesday. Yeah, Wednesday of last week. And that was actually hard for me to do because I felt like I missed it, but we're okay. We're okay. This is about as much buying it going up as I can do after it's hit a level. But as you see with Intuit, we didn't quite get that. In fact, it kind of really sort of went up and held the resistance above it. And so that's a no-go. I'm glad I'm not in that either. So that is the list of this year's plays. Oh, and currencies, actual currencies, USD CAD. This is one I've been short for a while, and USD Chinese Yuan. Basically, these are just dollar shorts. And speaking of which, let's do a DXY. This is the dollar index. Yeah, US dollar continues to go down, which is fine, which is normal when you have equity prices going up. This is a normal correlation. People sell dollars to buy stocks and vice versa. So dollar value going down, don't care. Not a big deal. People can yell and scream about, oh no, the dollar is worth less. But I mean, as they say in the crypto world, zoom out, bro. As opposed to where it was in 2008, 2009, 10, 11, the dollar is now still up off its lows. Let's just pick something here by about 20%. You still have 20% more buying power than you did a decade ago relative to other currencies in the world. So People love to talk about it. People love to yell and get you scared about how things are going to be bad. But yeah, just look at the chart. All right, let's wrap things up. Google double. All right, so yeah, catch up. Try to do it from the first. ASTS is one that we had on the Discord, I think earlier this morning. AST Space Mobile. Oh man, that sounds fun. What are we doing here? Well, as I said, I have a very, very hard time buying stuff going up. But what I will do for you is I will say that I will draw my volume profile and 50%, and we'll see if he gets back to 3147. We'll check it out. Or if it makes a new high, we'll update that. But I gotta look for a pullback. And what would be interesting is if that actually brings up the moving average, the EMA, to match with that level. Or, for instance, if the 200 moving average matches up with the volume profile. And so into this year, I would look for a pullback, and then we can see if we can get something like that to launch into space. So interesting there. I'll make a note of that. Not opposed to it if it meets those criteria. All right, let's see. Ton. Now, Ton is different from Tron. Yes. Okay. Is this it right here? Well, just based on EMAs, you're kind of caught. You're not bad. You're not good. You're actually doing pretty good, actually. In fact, you're kind of caught. So look to see if you can get a breakout on this on time. Hymns. I know this has been going kind of crazy. Hymns. Look at that. You got a nice little 200 EMA hit. Like I said, I've been researching EMAs. I'm not trading necessarily off them yet. I'm just observing how well the simple concept of an exponential moving average does tend to hold up price, especially the 200, But I haven't really started taking trades based on it yet. I've been trying to find ways where it matches up. But hims and hers, otherwise, aside from that, is really kind of wonky. That is official trading turn, because while you just got all these highs in here. I mean, yeah, 40, 44, 60. It's there. It's holding. Yeah, okay. I mean, that's the level it needs to hold for sure, is that 44.60. You've got some good support there, but do not let it break below it. I mean, if anything, I'm not a buyer of it here. It's not like a trade that I would like to set up. I want to see a trade come up, hit that level once. That's where I want it, and then goes, makes a new high. That's the textbook. For it to kind of come back, hit it, or excuse me, to come back and break below it, and then come back again, hit it, and then see, these I see as failures to go higher. You want something to go higher, don't you? You want it to get up there. You want to get up there and break it. But yeah, this gives you, if you're in it, this gives you a really good dividing line for where you don't want it to go. And as volatile as this is, yeah, you need to be smart. If it comes down and breaks these lows, if it breaks 40, you need to, I'm not going to tell you what to do, but be smart. Be smart. All right. Let's see. QS. QuantumScape. Ooh. All right. So let's see. This thing has a low. This is something that we can look at in chart. Low to the high, and we have an entry into the valley of risk. What is the value of risk? It's when you get to a 50% level, you break it, you got to get out, especially when it comes back up and it holds that as resistance, because now you're in this valley of risk where you don't know where it's going to stop going down. You just know that you're going to be emotional if you're a bag holder, and if you sell it, it's going to go up. If you hodl it, it's just going to keep going down. That's what the value of risk is. Once it's broken at 50% level, anything can happen, but you're already kind of emotional about it because you're in it and you're watching it and you don't want it to keep going against you. All your decisions are going to be wrong. It's best to just cut it, and find better use of your capital. Find something else that's pulling back to 50%. Try that instead. Because once you have broken through there, your rules are gone. You have nothing to go on except just back holding. Now, sometimes that can pay off, but you just need to not look at it and forget that you own it. It's the only way once it does that. You get out at a situation like at a place that you either do one of two things. You get out now, maybe come back and look at it if it gets back above that level, or you forget that you own this. You like maybe put it in the tab if you can on your platform where you can hide it or you can like roll it up and you just forget that you own it. And you come back a few, years later and you're like, oh wow, this thing's, $100 now. That's the only way that you can manage something like this. So those are your two options. You either cut it now, find something else to put your money in, or you forget that you own it. That's the valley of risk. You can't look at it. It's a dark valley. Let's see. Google. I like Google. Full disclosure. I've owned it for a very, very long time. Like 2009, 2010, like before, like back when, I was working in IT, it was like, oh, let me buy Google because I'm on Google all the time doing work, like researching how to build networks and fix networks. Yes. So own a bunch of Google. So double tops are not as important to me as when a double top forms, but it fails the breakout. Now, and yeah, you do kind of have today, this week, a new high that comes up here at 209.38. Yeah, it did kind of fail that breakout, didn't it? This is one of those things is, I want to be very cut and dry on and say, like for instance, with, Bitcoin, Bitcoin on the weekly, let's just look at a couple of these. So you have again, a sort of marginal weekly false breakout here back in January. And what did it do? Yeah, that was your pullback, signal there. Or you had another one back in, you know, March of last year. And again, that was another kind of, marginal that triggered a pullback. Of course, the most important one, which was back in 2021, which was, again, the start of the bear cycle that led to a, 60, 70% pullback. Yeah, so that's why I say that false breakouts are very, very important to look at. See, this is what's difficult because here I am, as I said, I'm talking my book. I own a lot of Google. I'm like, is this something I need to worry about? Do I want to sell some Google shares? I kind of don't. Because I own them at such a low cost basis. But yes, that is there was a chance. There was an attempt. Was it the Reddit subreddit? There was an attempt. There was an attempt to make a new all-time high on, to make and sustain a new all-time high on Google, and it failed today. Let's come back and look at this next week. Let's give it 2 weeks. Let's be a little bit of a degen. And I say that because, if I was absolutely rule following, I would say that's bearish. But let's give it a little bit more. Let's give next week a try. Let's see how this rate cut stuff gets processed by the market's collective brain over the weekend and see if they're actually risk on or not. I got to tell you something. Let me just kind of talk my mind to you guys. I am constantly trying to see. I'm a speculator, and so I'm looking at this market, and I'm seeing some signs of toppiness, of frothiness, of exuberance, of greed. I think that what is it? Robinhood has been putting out these IPOs now. People can buy IPOs on Robinhood. And one of them that came out is bullish. Okay. And well, in the first day of trading, it was LOL. I don't even know what this company does, but people bought it. That's a sign of frothiness. That's a sign of being a little bit too much risk on appetite. Doesn't mean the market's going to crash, but it's going to make me a lot more edgy about things that are a little too bullish. And I'm definitely not going to be looking to take on massive amounts more risk. So what am I saying? I'm keeping an eye on the market broadly, and something like Google, where it does something like this in this kind of market condition, I'm going to be extremely sensitive to possibly say, hey, let's start building up some cash. Let's start building up some dry powder, as they say, for when and if the market pulls back. The risk is always that you miss out on gains, but this bull market has been going on for quite some time. We had a big reset back in April, but doesn't mean you can't get two in the same year. We'll see. Can't do anything wrong buying the 2AMA. It does seem to work. It does seem to work. I predicted the entire move back in January. It was following like my life like clockwork. Well, maybe you can share that. I wish I was that good. I have to work really hard. All right. So Cracker Barrel. Sure. Let's look at Cracker Barrel. That has been in the news this week because hold on, let's bring it up because I heard something funny about that. So let's do, if you're in America, basically Cracker Barrel is this sort of, it's a restaurant. It has kind of like Southern food, whatever you call it, biscuits, gravy, fried chicken, that kind of stuff. And so the old logo of Cracker Barrel was this. The new logo is that, and they're trying to like rebrand, like a lot of brands have, but making it a little bit more, I guess, I don't know, I'd say more lame. But the joke I heard was they removed both the cracker and the barrel from the logo, and that's their new rebrand. And so, but I mean, it's big news. A lot of people on Twitter are like, "Oh my God, it tanked so much." But I mean, really, again, anytime you hear these news articles about, oh, it's something happened and it's down. This was big on Tesla. Okay, Tesla, over the last year, well, since before and through the election, people have been like, oh my God, Tesla, Elon did this, but like what you'll find is you'll have the news come out and it will say, oh, Tesla down on Elon making some tweet, and it'll be, this day right here. Okay. Like this is a big day. Let me measure it. Yeah. So a day right here was like, it's a 7% day. Oh, Tesla down. But like what is that in the grand scheme of things? Like, it's a volatile stock. It goes up and down a lot, sometimes double-digit percents in a day. But broadly speaking, can you show me on the chart where Elon's tweet touched you? Okay, so that is what I mean to Cracker Barrel, where yes, everyone's like, oh, go woke, go get woke, go broke, whatever. But really, if we look at this on a weekly, I mean, it seems to me that their problems have been, they've had problems. And I don't think that is particularly their problem. Their problem is not that it went down on a weekly, but I mean, really and truly, oh, wait, hold on. That's actually going back a few months. The problems are even worse. So yeah, we're down what on Cracker Barrel? This week we're down 12%. Okay, well, what about the week 3 weeks ago? We were down 10%. What about the week back in February where it was down 17% in a week? You didn't hear anything about their logo change then, did you? So again, this is why I don't like narratives. That should have been the topic for this week's live stream. I hate narratives, and I don't trade based on politics, because while you got everyone talking about the politics of it and like wanting to, blame the CEO, Uh, this already has a lot of problems, and whatever is the news is focused on engagement. It's focused on getting eyes to look at their articles and their pictures so that you see advertisements. And so they're going to pick the most sensational explanation for a price movement as possible. Because if for some reason it's not popular to say, hey, something hit the 89 moving average multiple times and went down, most people don't even know what that means. So they're not going to read that article, even though that's far more indicative of price action. And we know this, you know this by being a student of price and charts and things like that. If I said to you, it has hit the 90 or 89 EMA multiple times over the last 2 years, and that has sustained its downward trajectory, you understand what I'm saying because you are a student of charts. But if you wrote that in a headline or you wrote that in a tweet, people are going, huh? What is this astrology for men? But if you publish something about how get woke, go broke, people are going to be like, yeah, I agree with that. That's why it went down this little amount as the part of a broader downtrend. See, does it matter? Can we make money off of it? I don't know. Maybe actually. While I say I don't want to trade on narratives, trading against narratives is another thing entirely. And let's just out of curiosity, let's do a volume profile of this range going back to here. Yeah, it's kind of I would like to see this thing come down to 32. People have asked me like, well, why do you choose to draw that? Well, let's do the whole shebang and see. Yeah, so there's a lot of little volume profile nodes, but if we were going to say where we'd actually buy this at an absolute bargain discount is 28.45. I've also been looking at some other things like Ben Graham numbers as well, and sometimes trying to figure out if that will match up with volume profile. But that is going to be the topic for another live stream once I have that research done, that I'm satisfied presenting it. So, all right. Well, I think I got everything. I think I got all the symbols to look at. Oh, no. Yeah, we got HIMS and QS. ETH just hit a new all-time high. Congrats if you're in that. Yeah. It's got to sustain it. I told you, like this weekend, it's going to do it. You don't get that close and not do it. But yeah, 48.67. There you go. See where it closes this weekend. All right, guys. Got some things to do. We'll see you next week. Have a good weekend and trade wisely. Bye-bye. Do, 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 do.